Welcome to Closing Day. Closing Day is a local real estate show that covers everything in real estate from the first moment you think about buying real estate right up to closing day. My name is Jeff Delgrand. I'm your host. And today our topic's going to cover closing day. And who better to have us here other than the chap that takes care of closing, which today we have Chris Harrison from Harrison Law Firm. And Chris, thank you very much for being on the show.
Thanks for inviting me, Jeff. Happy to be here.
Yeah, well, we're going to have some fun today because closing day is the most important moment in a person's, purchase. That's when they get the keys from you, they're excited, they're running to their house, and you're the one that makes all that happen. The real estate agents do what they need to do, the mortgage brokers do what they need to do, but we're all scrambling around, and you're the one who brings it all together to fruition, so when the person finally gets those keys in their hands, I'm sure you're the one that gets the high five, thank you very much, and out we go.
Well, there's, first of all, I might have to make a bit of a true confession here, Jeff, but
all right.
I am supported by a terrific staff, so when you say I'm the one that makes it all happen, I'm going to give a lot of credit to some of my staff members. I have some very senior and very experienced law clerks working for me.
Yeah.
So I'm really lucky in that regard. But you're right. Closing day is exciting. It can be pretty frantic at times as well, as you well know. But it is exciting to be able to pass off a set of keys to people who are about to set foot in a new home, particularly first-time buyers. I get a real buzz out of putting keys into the hand of a first-time buyer, and holding their hand a little bit through the whole process. Because if you remember, whenever we all bought our first homes, it was a mixture of dread and excitement.
Yes,
So there's a little bit of hand-holding involved there as well.
You have anyone cry tears of joy as they're getting the keys?
Oh, I've had all manner of reaction, but generally it's. Generally, when we put the keys in their hands, they're not in the office for very long because they're so excited to get over there and get into their new digs.
Yeah. So just sort of as a summary of the legal process from the beginning to the end, I don't want to get into every detail, obviously, but where does it start? When does the client first hear from you, or you hear from the client, and sort of what are the steps that people have to go through?
Well, typically we're the last group of professionals that get involved in the transaction, although that's not always the case. Right. Sometimes realtors will ask us about particular clauses or some issue that they may be aware of in advance of the transaction. Sometimes we're reviewing the agreement of purchase and sale before it ever becomes final. But I would say that typically we're the last group to get involved in the deal. Mm-hmm. Whenever the deal comes in, based on closing date, we have staff members that will contact the client and get information. It's minimally invasive information.
Right.
For example, if it's a sale transaction, we'd be asking how they pay their taxes, who pays their taxes, what status the taxes are in. Sometimes they're in arrears. Who their mortgage might be with, and that sort of thing, so that we can get our file properly moving towards the information that we need to close. So for example, on a sale, the reason we need to know who the mortgage is and the mortgage number, obviously, is because one of the components of delivering clear title to your purchaser is dealing with the mortgage and having it discharged.
Right.
Yeah. So that would be sort of the opening stages of the transaction. On purchases, of course, there's the title searching phase where we do our title search, and we do a requisition letter to the selling law firm, mm-hmm. Setting out what we've found on title and the things that we need, and as well as certain representations or warranties that might be found in the agreement of purchase and sale. So that all sets the stage for the preparation of the closing documents.
Okay, so about how many days before, say, closing day, would they expect to hear from your firm?
Well, they should be hearing from us within a few days of the agreement coming in. So that's a function. Okay. That's a function of the interval of time between the agreement being signed and becoming firm and binding and the actual closing date. Typically, they're hearing from us within a week or so of the agreement of purchase and sale arriving in our office, so that we can get our client intake forms filled out. They would be hearing from my staff members probably a couple weeks prior to closing, asking certain information, where do you want to pick up the keys, and all of that kind of thing. Typically, I meet with them 1 or 2 days before closing. And sometimes that's also a function of, when do documents like mortgage instructions arrive. So we are, to a certain extent, on purchases, we're a little bit dependent on banks and lending institutions to get mortgage instructions to us in a timely way. On sales, getting the discharge information is pretty critical for us to be able to give the full financial picture to the client.
Yeah, no, I have been in your office before, and I recognize the fact there's a pile of people working there, and it's a busy place. There's papers flying, and there's people on the phone, and it just seems like there's so many hands that have to touch a deal to make it happen, to bring that closing together.
Well, on closing day, there's a lot of things going on in the background that clients may not really appreciate. They sort of, they might come into my office to sign the documents with me perhaps 1 or 2 days before, and not really realize that on closing day, in advance of closing, we're requisitioning mortgage money from a mortgage lender. We may be answering last-minute questions from the mortgage lender about certain aspects of the client's identification, because we're submitting documents ahead of time, including client identification.
Right.
Sometimes there's issues about insurance. Maybe the insurance broker didn't get the right address of the mortgage lender on it. There can be any manner of things that are going on, as well as the exchange of documents between law firms, getting keys, getting the banking done. So there is a lot of activity on closing day.
Right. Yeah, I could imagine. Well, like I said, I've been in your office. I've seen how busy everyone gets. Now, if someone comes in with an offer and they've paid more than asking, like the asking price, which happens all the time, does that affect anything to do with closing day? Is there anything with land transfer tax? Is there anything to do with insurance? Is there anything that...
Well, what I would say, I don't think that if someone paying over an asking price doesn't necessarily affect what we do on closing day. But I will say that I've had deals that have been affected by that scenario. And what we've found, and I think most realtors are pretty good about this, but I have found on occasion that perhaps the clients have been, or the purchasing clients in that scenario, may be unaware that they're putting a lot of faith in whatever the appraisal might come in at. So for example, if someone bought a house and it was listed at $400,000 and they agreed to pay $500,000 for it, the burning question is, what is the appraisal going to come in at? Because if the appraisal comes in at $400,000, the fact that the client has now contractually bound themselves to pay $500,000 means that the bank isn't going to finance that extra $100,000. They will base their financing, and of course, as you well know, that's based on a percentage of the appraised value of the home. So if you're to avoid things like the high ratio mortgage insurance, you've got to put 20% down. So in that case, the bank on a $400,000 purchase is only going to finance a maximum of 80% of that, being $320,000. But the client has agreed to pay $180,000 more, $500,000 for the home. That money has to come from somewhere, and let's hope the client has it in their mattress, because the bank's not going to finance them for that amount.
Or mom and dad might get a phone call.
A late night, you talk about tearful phone calls, that could be one of them. So
I know. Now, what about if someone, they sell their home, but it doesn't close until, like, let's say they bought a home closing the 1st of next month, but they sold their home, doesn't close until the 15th of next month. They're going to own 2 homes for a couple of weeks. Now, is that something, it's called bridge financing. How does that work with the legal end of things? Is there...
well, I don't know how other lawyers handle this, but on a bridge loan situation, I don't charge anything extra. I feel that it's part of the service being provided in terms of getting people into their new home on the purchase side. I'm a big fan of bridge financing. We are finding that in this day and age, when I say there's a lot going on in the background on closing day,
Yeah.
sometimes we are fighting, pleading, begging with mortgage lenders to provide us with the mortgage money so we can get the deal closed.
Right.
So you can imagine that if you're selling and buying on the same day, and we have to sell first before we can buy.
Yeah.
That's the sequence. There can be no other sequence. The sale must take place because we have to take the money from the sale to fund the purchase.
Right.
So you can imagine that if anything happens upstream of that process, as with our purchaser's mortgage company, or perhaps our purchaser has to sell before they buy,
Yeah.
you can see that we can get into a string of transactions, and anything upstream can cause our transaction to break down. So if we don't get that sale done, and we still have to close the purchase, then there's a breakdown there, and contractually our client could be in a bind. So I'm a big fan of bridge financing,
Yeah.
which allows the client to actually purchase their home.
Mm-hmm.
They're in their new house on the day of closing of the sale house, and essentially the way bridge financing works is the bank turns your existing home into an ATM machine. They give you a card, you stick it in, and you take out a bunch of equity that allows you, in conjunction with your new mortgage, it allows you to complete the purchase. So they're in their new home a week, 2 weeks, sometimes a month. Sometimes people will bridge for a little bit longer period because they might want to do some painting or some fix-ups or whatever. They're in their new home, and whatever happens on their sale is going to happen. I'll say this, that I've never charted it, but I'm going to say that based on my experience, 98 or 99% of the deals that don't close on time eventually close.
Okay.
And the way I was trained in real estate is the best deal you have is the deal you have. So if I'm not worrying about getting squeezed on the purchase side of things, if all I have to worry about is the sale because the client's bought first,
Right.
then I'm quite comfortable in allowing transactions to extend by a couple of days or whatever to allow the financing to take place. I mean, you don't want your client to be out of pocket anything. So if there's a bridge loan that's to be paid out, if there's a mortgage that we're planning on paying out on closing day, we attach all of those costs to the purchaser that's delayed.
That's good to know that. It's and bridge financing, I understand, does make a lot of sense. It's more convenient. Something I do want to touch on is, and we'll do this after break, is firm deals. It seems like real estate agents are saying to the clients, if you want to buy a house, you have to go in firm. And this is creating a whole new dynamic to the market now.
Absolutely.
So when we come back, we're going to talk about firm deals and how to handle them and the details around them.
Sure.
Okay, thanks.
Thanks.
That's good.
All right.
It's easy. Welcome back to Closing Day. I'm your host, Jeff Delgrand, and with me today I've got Chris Harrison from Harrison Law Firm, and we're talking about closing day. Now, one of the things I wanted to ask you, Chris, is besides good looks, what should someone look for in a lawyer?
Well, first of all, if good looks were the criteria, I'd be looking for another job. So
Okay, all right.
but thank you. So some of the things that I think people should be looking for, and as with many things in life, price is often a factor.
Mm-hmm.
And I mean, I know that people have certain views of the legal profession. So please don't misunderstand me when I say the price shouldn't be their primary consideration when they're considering who's going to be their lawyer to do the transaction.
Right.
They should be thinking about things like what percentage of the lawyer's practice is devoted to real estate.
Right.
Does the lawyer, to what extent is the lawyer involved in the file? How many files per month is the lawyer closing? I know of law firms that in busy months are closing, 300 deals.
Really?
So do the math at 40 hours a week and 300 deals in a month, and that'll tell you how much lawyer time goes into it.
Yeah.
Does the lawyer inject a personal touch into the files?
Mm-hmm.
Does the lawyer meet with his or her own clients to sign the people up? Do the clients ever even get to see the lawyer?
Yes.
There's a lot of factors that go into choosing someone that you're comfortable with, and while of course price has to be a consideration, those
mm-hmm.
other things have to be taken into account as well. So those are some of the things that I would say to people that were thinking about hiring a real estate lawyer.
Right. Yeah, and that makes sense because it's a very emotional experience buying a home. And you want to have some comfort there. So, as you said, lawyer time is important.
It's hugely emotional, and clients need to know that if they have a problem, mm-hmm. that they can contact the lawyer, and they're going to get a response within a reasonable period of time. It is a highly emotional period of time for people. There's a lot of stress on people's plates. They're thinking about, they're worrying about their numbers. I'm selling, I'm buying, this is my mortgage, this is what I'm going to realize, these are my commissions. They're doing their numbers, 8 or 10 times a day for months on end, wanting to make sure that the deal is going to go smoothly. They're moving their children from one school to another, and how are they going to adapt to that? So there's a lot on our clients' plate, and they need to know that if they're stressed out about something, I mean, part of my job is to try and take some of that stress off their shoulders.
Yeah.
If they have questions, I encourage them to call or email so that we can, I would much rather spend 5 minutes on the phone with a client and set their mind at ease than have them lying awake for days on end stewing about something.
And that would be a terrible experience.
Mm-hmm.
Now, this is a question that I get periodically, but I think it's important, is if a couple are buying a home, they can own it in one of two ways. They can own it, I believe, as tenants in common, or they can have joint tenancy.
Sure.
It's terms I've heard before, but I don't have a full understanding of what the difference is. So a couple come to you, they want to buy a home. What's the difference between the two ways of owning the home, and what would you advise a couple?
Well, the advice largely depends on their personal circumstances.
Okay.
The way many, if not most, couples would take title to a home mm-hmm. is as joint tenants. And what that means is that on the death of one or the other co-owner, the survivor acquires the deceased party's interest in the property by what's referred to as right of survivorship. Okay. There's a very simple process that, following the death of the one co-owner, would vest title into the survivor's name. There would not be any formal estate process involved. There wouldn't be probate fees to the province of Ontario. It's a very efficient way of keeping an asset out of formal estate administration.
Right.
So the other method, tenancy in common, means that the deceased party's interest would flow through an estate. Now, sometimes you might have couples who are in a second marriage, who each have kids from a previous marriage, and they're each contributing equally towards acquisition of a home, but they would like to know that their kids are going to receive the benefit of their half interest on passing. That might be one scenario where tenancy in common would make sense. So the distinction really is about death and where the property rights vest on death of the party.
Okay, I see. I mean, I've heard the term, this is how I remember what the difference is, but I didn't understand the details of the difference, is that under joint tenancies, if one of the co-owners passes away, the other person gets the joint. So that was the only way I knew to explain it to people, but now I know the details.
Right. That's exactly right. Yeah.
That's okay.
Although joint has many different meanings.
So. Well, especially with the new Liberal government. Okay, so we've gone through a bit about the process. The client's going to get contacted. They're going to meet with you to sign up, or with their lawyer to sign up. They get the keys on closing. Is there any other caveats you can think of in there, or is there too many to talk about now? Because if not, I've got another question we can roll to.
Sorry.
I'm just wondering, is there anything other than did I have that process correct?
Well, one of the things that I marvel about the real estate clerk who's putting files together is their ability to multitask.
Okay.
The reality is that in the course of putting together a real estate transaction, there are probably hundreds of sub-steps that the clerks are involved in, right from the file opening process through to closing, through to reporting the transaction. Following the transaction, we're required to send out a reporting letter setting out all the details of the transaction and enclosing some of the documents that the client would have signed. In the case of a purchase, it would include a copy of the registered title transfer and the registered mortgage and things like that. So there is a whole myriad of steps. I've way oversimplified, given our time constraints today.
Yeah.
So there's plenty of other things that we could certainly talk about.
Okay, well, I certainly appreciate you simplifying it for us. Now, just a couple of odd questions. One is, what is and you may not have thought this stuff through, but what is the largest real estate transaction you've had to close?
Well, my practice is primarily residential real estate. So, so I have offices in Brampton and in Orangeville, and as you know, Orangeville is an area that has homes of fairly modest price right up to multi-million-dollar homes. So I have done the $1 million residential transactions, but I've also done one bedroom apartment style condominium transactions of much more modest.
Right across the board.
Completely across the board. I don't do very much commercial real estate work.
Okay. Yeah, I understand. Commercial's a little bit of a different beast. Now, we did talk just before the break, about firm deals. Now, this I want to get into a little bit, because everyone feels that they have to go in with a firm offer these days. It's really the environment we're in. How does it handle your end? I mean, it seems a little risky to me.
That all depends on what stage of the transaction that I'm brought in.
Right.
So if, as is the usual case, if I'm brought in after the deal is already signed, sealed, and delivered, it doesn't change my approach to the transaction at all.
Okay.
I'm going to open my file, I'm going to put the file together, I'm going to meet the client, sign them up, close the deal.
Yeah.
But what I worry about when people are signing firm deals like this is they're waiving things like home inspections, they're waiving financing. Personally, if I were a seller, I would take some comfort in knowing that my prospective purchaser is taking 2 or 3 days on a conditional financing clause to get their financing ducks in a row, and then waive the financing. But that's me.
Yes. Yeah.
I understand that there's a completely different dynamic in the marketplace right now.
Yeah.
But here's where it might impact people. So if they're delivering that clear, clean offer, not conditional on financing, not conditional on home inspecting, and after I put the key in their hand and they rush over to their house, they stick their head in the attic for the first time and they find black mold.
Right.
They find that there's a leak in the roof. They find that there's a crack in the foundation. Any of these things that might have been turned up by a home inspector's report are things that they've waived.
Yes. Yeah.
So there's a very heavy component of buyer beware in residential real estate transactions. So there's a very good possibility that unless the seller has acted fraudulently and has attempted to cover up or conceal these defects in the property, there's a very good possibility that my purchaser who's now just taken on a great big mortgage, all of the air is going to go out of their balloon in a hurry when they find out that they've got a $5,000 or a $10,000 repair that they have to do.
Right. Now, I've heard that some purchasers look at it as, $5,000 deposit with the offer. That's their risk. If they back off or back out of the deal, they'll lose the $5,000. So that becomes sort of like the new conditional offer, losing your $5,000 deposit. Is that?
Well, in the the current dynamics of the market are a little bit unusual.
Yeah.
In the sense that that's not all that a defaulting purchaser could stand to lose.
Mm-hmm.
Sure, you're going to lose your deposit if you default on the transaction. But if the seller now remarkets the property and despite their best efforts, they sell the property for $50,000 less
mm-hmm.
than what you, the defaulting purchaser, had agreed to pay,
right.
They've just suffered a $50,000 damages claim. So it's not just the deposit that you stand to lose. You could be sued for $50,000 after the seller has resold the home at a lower price.
Wow, that makes a bit of a scary market, doesn't it?
Well, again, the dynamics of this market, things seem to be rising daily.
Yes.
So a lot of that might be driving this belief that that losing your deposit or that a firm offer is the new conditional offer, and that you only have to worry about losing your deposit. That could be true because there may have been 15 other people lining up to put offers in on that home.
Yeah.
But that's not going to be the case forever. So all I would say is, if you do it,
Okay.
consult with your lawyer before you make those offers, and take their advice accordingly.
Okay, well, that's great. Chris, thank you very much for coming on the show today, and thank you for taking a really tough topic and simplifying it, as much as you could under the time constraint so we could all understand it. And I want to thank everyone for watching today. This is Jeff Del Grant for Closing Day, and we'll see you next time. Hello and welcome to Closing Day. Closing Day is a local real estate show that covers everything in real estate from the very first moment you think about buying a home right up to closing day. Now, there's many different things that happen between that and closing day, and we cover most of those topics on through these shows. My name is Jeff Delgrand. I'm your host. And today's topic, what we're going to cover is called a reverse mortgage. Seems like a mouthful. And reverse mortgage is, if you've never heard of it, we're going to cover it today. If you have heard of it, you may have heard of some things about it that are incorrect because they have them in the US, but in Canada, they're quite a bit different. So today with me, I have Sean Russell from Home Equity Bank, and Sean's going to help us with the details of a reverse mortgage. Sean, thank you very much for coming on the show.
Thank you, Jeff.
Now, Sean, I guess the very first question is, what is a reverse mortgage?
Well, a reverse mortgage is really a fancy name for allowing somebody to access the equity in their home.
Okay.
So that's all we're doing, through a loan facility.
Yeah.
So they need some funds, they've run out of their investments, they're healthy, they're living longer, they want or need some extra funds, and we can do that by releasing some of the equity from their home.
All right. Now, can anyone do this?
No, we do work with a very specific group of individuals.
Yeah.
55 is as young as we'll go with this product.
All right.
And then there is no maximum age. But the individuals on title on the home, husband and wife, or husband or wife, need to be 55 or older.
All right. So 55 or older. So walk me through the steps of a reverse mortgage. Someone comes and let's say they watch the show and they think, I would like to get one of those. What steps would they go through?
Sure. The very first step is they would contact you, or somebody in the industry, like somebody like yourself.
Thanks.
And basically, we would start the process by getting in touch with me as the BDM at Home Equity Bank.
Yep.
And the process is very simple. We're going to put an application into our system.
Yeah.
We're going to collect some data from the client, some of their identification, of course, some information about their home. We're going to take an appraisal on the property.
Right.
Because for us as a company, that is the most important factor. We need to get an actual firm value of that property so we can work the numbers from there. So that's the starting process.
Right.
And then once we get all those numbers together, we're going to put the contract or the package together for the client, and we move from there. The funding process, Jeff, just so you know, from start to finish is about 4 weeks.
Oh, that's relatively quick when
pretty
you talk
quick,
about a process like that. So, I mean, I love this idea because people spend their whole lives paying their mortgages off. You know, they end up with a home that's got tons of equity in it and sometimes no mortgage at all, but they don't have a lifestyle. So this is a way you're saying for them to tap into the equity. Now, how does the money come to them?
It's pretty straightforward. So at the very tail end of the process, the client is going to meet with ILA, Independent Legal Advice.
Right.
And they're going to sign off on the final documents at ILA, and then we're going to fund the money into their bank account within 48 hours from that signing.
Okay, now, is it a lump sum? How is it done?
It's really up to the client. We have two options. So the first one, and our most popular product, is our CHIP reverse mortgage, which is a lump sum product. So those are for clients that say, I need X amount of dollars today for a particular thing. Could be a new roof on their house, could be to give some money to their kids or grandkids, but they need the money today.
Okay.
The second option is a product called our Income Advantage product, and that's a hybrid. So they could take a little bit of a lump sum with that product, but also provide themselves either a monthly, quarterly, or semi-annual draw on income. So if they qualified, say, for $100,000, Jeff, they could take that out in increments. $1,000 a month until it runs out, $2,000 a quarter until it runs out, so it provides them some income options.
That's neat. It's kind of like making your house into an ATM machine.
Almost, with the benefit of no payments. So our product does not require any payments for the clients.
Really?
Correct.
Okay. So you said you can start at 55. All right. So let's say I'm 55 and I want to get a reverse mortgage on my house. What are the limitations? Do I get all my money? Do I?
That's a wonderful question. And bear in mind, with 55-year-olds, we do very little business, and I'll explain why. If you were interested, Jeff, in this product, we would look at 3 factors to start the process. We're going to look at your age, we're going to look at the location of your home, and we're going to look at the type of home.
Right.
So I'm going to start at who would qualify for our maximum of 55% loan to value. So that is our maximum. We will not lend more than 55% of the value of the home.
Okay.
In order to reach that maximum, you'd be looking at about a 75-year-old couple living somewhere in the GTA in a fully detached home. That's somebody that would qualify for our maximum of 55% loan to value.
Right.
Now, if you're dealing with a 55-year-old, you're going to go all the way down to about 18% loan to value. And the reason we go that low is we want to stay very, very conservative with this product. We don't want our clients running out of equity much later in life when they're in their 70s or 80s. We want to make sure there's enough equity still in the home that they can pass on to the beneficiaries.
Okay. Now that's, so you two, you said there's going to be equity in their home, hopefully to pass on to the beneficiaries.
Correct. That's our goal, is we want to make sure all of our clients have some equity left at the end of this process so that when they do eventually pass away, that there's something left to give to their beneficiaries. That's why we're very conservative with our loan-to-value numbers.
Okay. And what type of interest is on a mortgage like this?
Great question. We have a number of different interest rate term options that we offer, but on average, we're looking at about 5%.
Oh, really?
On average, just to sort of generalize it.
All right. So that seems fairly reasonable for what you're doing. Now, this is a home equity loan? Is that what you call it?
It is a home equity loan, correct. So we are taking equity out of the home and providing that to the clients in the form of a loan. The interest is accumulating on that, Jeff, because they're not making any payments. So if you started at $100,000, over 10 years, that $100,000 is going to grow because you're not making any payments. But what our clients often forget sometimes is that the entire value of their home is also growing at some arbitrary rate.
Right.
I can't really put a peg on that, but I mean, we know it's been amazing over the last 15 years. But even if you said it's growing at 2 or 3% a year, very conservative, you're still going to see that wonderful home growth. And even though your reverse mortgage is growing, there's still lots of equity left at the end of the process. That's
really good news. The TD Bank website actually has tracked home equity appreciation since the beginning of time, and the average is 6.2%.
I've seen that absolutely. So we in our illustrations we use 3% in our home growth to stay very conservative. And even with that 3%, there's still plenty of equity left after 15, 20, 25 years.
That's good news. That's good news. Now, there's all types of, what can I say, combinations of people that own homes. There's like a single individual, there's married couples, there's newly married couples, and how do you handle all those different mixes? Like how?
Really what we're looking at is when we're looking at a property and the people that are living in that property, in order to do a reverse mortgage, we're dealing with the people that are on title.
Okay.
Now again, this is a matrimonial home. So in a situation where there's a husband and wife and one of the spouses is not on title, we still have to use both ages in our application because it's a matrimonial home. So we need to ensure that both parties are over 55, whether or not they're on title or not.
Okay. Now, in one of our previous shows, we had a lawyer explain to us the difference between owning a home, tenants in common, or joint tenancy.
Joint tenants, yes.
Now, tenants in common, if just a quick description is, if one of the co-owners of the property passes away, that portion of their ownership will go to their estate. Where in a joint tenancy, if they pass away, that portion of their ownership goes to the other person.
Yes.
I was joking around about the fact, the way I remember it is because if it's under joint tenancy, if somebody passes away, the other person gets the joint. It's just an easy way for everybody to remember.
Right.
So is that affected at all in the way you do the home equity mortgage? Or?
It is, and that's a wonderful question. So we cannot do a reverse mortgage on tenants in common. So the titling of the property must be joint tenants for us to do a reverse mortgage. Now, it's very easy to alter, and I've done this in my 2 years here at the bank. I've had some situations where we had to do this. It is a very simple process to do if the parties are willing to change the ownership.
Right.
A lawyer gets involved, and it's a pretty quick and simple process. But if it is tenants in common, we cannot move forward until that's changed.
Okay. Now, you said that an appraisal has to be done in the house.
Correct.
Now, what other work that needs to be done in the house? Cracked foundation, black mold in the, something like that. What happens if that happens?
It doesn't happen often, but where it does happen, we give the prospects, potential clients, the individuals, the opportunity to fix up the property. So our appraisers would go out, they would note that for us, they would alert us of it, and we would come back to whomever they're working with, whether it be a bank, whether it be through a mortgage broker, whomever they're working with, we would say, this is the situation, we need to repair these items before we move forward. And oftentimes what happens is we use some of the money from the funding to cover those costs. So we can actually do the reverse mortgage and just ensure that those things are going to get done, and then we can still move forward. Okay, so they would still apply for the reverse mortgage, they can still be approved for the reverse mortgage, and if, let's say, there was $10,000 worth of repairs need to be done to the house, what, would the lawyer hold that money aside, or? We would simply get some estimates, and then it would be part of the contract that out of the funding, we need to pay that $10,000 to get everything up to par, and then we move forward from there. So we could indeed move forward, even if there was some things that needed to be done. Oh, so if we have, let's say, an older couple own a home and they know some work needs to be done,
this could be a way to get the...
100%. This could be a way to get the funds to do that work.
Oh, that would be brilliant. Now, do you do that very often?
Not often,
Okay.
but we definitely can do it. It's a very easy process to do.
All right. What's the most common reverse mortgage? Like, what's the reason people mainly ask for a reverse mortgage? What's their motivations?
The 2 or 3 main ones, and I'll go through them. The first one is we're working with individuals that want to alleviate the stress of debt.
Yeah.
So we do find that, unfortunately, there's some demographics that aren't playing in the favor of our seniors, where they're carrying a lot of debt into retirement and then taking on new debt into retirement. So we're dealing with folks that are very stressed about that, and
Yeah.
their cash flows don't provide the ability to cover those payments. So they want to alleviate that stress and
Yeah.
use the reverse mortgage to pay off some of those debts or all of those debts. So
Right.
that's the first one. The second one, a big trend we saw last year, Jeff, was mom and dad or grandma and grandpa taking out a reverse mortgage on their home to help their kids or grandkids with their first home purchase.
Oh, okay.
I saw this in a large volume last year of reverse mortgages to help a 20-something or an early 30-something
Yeah.
young couple buy their first property.
That's excellent. That's,
It's a great
Oh,
way to do it.
I can imagine after people watch the show and they get that idea from you, the phone's going to ring off the hook.
It was one of our most popular reasons last year.
And it makes sense, especially in this market.
It's so tough to buy a home right now for somebody in their, they're 20, buying their first home. It's hard.
First-time home buyers need some help. There's no question, and they more and more often are going to their parents and their grandparents to
They
get
sure
that
are.
help. Okay. So we've got a little bit about the process, the appraisal, putting the application, some of the reasons they can use the money. Now, one of the things I get this question all the time is, and we'll get back to this because I understand this is going to be a deep question, but the market sometimes goes up, sometimes goes down. So if somebody gets a reverse mortgage for the maximum amount and the market turns, is there not potential there for that mortgage to actually become worth more than their house? So just leaving it at that, Sean. So I don't want to, like I say, I don't want to get into that, but that's one thing I want us to keep in mind.
Sure.
I'm sure
I'm happy to answer that at a later time.
the viewers are definitely going to, I just didn't want to forget that because that's a question I get quite often.
Myself as well. I do get that.
Okay. All right. Well, we're going to take a quick break, and when we come back, we'll touch on that and a few other topics.
Great.
Okay. Thanks, Sean. Welcome back to Closing Day. I'm Jeff Delgrand, your host, and today I have with me Sean Russell from Home Equity Bank, and we're talking about reverse mortgages. Sean, we touched on a couple of topics in the first half of the show, but something I needed to ask and I forgot was, what if someone has bad credit? Are they going to qualify?
The short answer is yes, and I'll expand on that for you.
Okay, please do.
We don't decline individuals based on past credit woes or consumer proposals or past bankruptcies. We're going to work with everybody.
Right.
The only difference is they might receive less loan to value or less money than they would normally qualify for based on that circumstance. But we certainly will work with them.
All right. So, like for example, if someone were to come to see me because they've got debt and they're trying to clean it up, odds are, if they're coming to see me, they're really in debt and they've messed their credit up. So they could use a reverse mortgage to pay this debt off and to start to build their credit again?
They certainly can, and we see that very often.
Okay.
With our applications, we do require a credit bureau to be attached to that.
Yeah.
But again, we're not declining a file or approving a file based on that credit bureau.
Okay.
We're just looking at it because in some instances we do need income verification for the individuals, but we're certainly going to work with them through any difficult situation they have, and they can use the funds from the reverse mortgage to help their situation out.
Wow, that's great because debt, financial stress is probably one of the biggest stresses that people have.
100%.
And this gives them a solution to a problem. So
it does. And just to further to that, we talked about the reasons why people use a reverse mortgage earlier, and they're not isolated. So what we often find is many of the people we work with have a little bit of debt that they want to pay off or need to pay off, but they also have other reasons as well. So they're sort of doing one or two or three things all together, and it just makes for a wonderful experience when they're all said and done.
That would be nice. Yeah, so they could potentially get a reverse mortgage to take care of debt, maybe help out a son, daughter, or a grandchild with a down payment on a home, and maybe have a portion of it for a monthly income.
All of the above. And I worked with a wonderful woman last year. She did a reverse mortgage, and she had to do a few of those things. She had to pay off some debt. She needed to put a new roof on her home. She helped out some family, and she took a cruise in December of that year with her Bridge Club friends that she couldn't do for the previous 5 years given her circumstances. So she called me at the funding of the deal, thrilled that she was able to take this cruise with her friends.
Yeah, that's got to be rewarding, being able to help people out like that.
Very nice. It is very nice.
That's great. Well, you feel like Santa Claus 365 days of the year.
There you go, yes.
Now, the other thing I was thinking, the question that comes up is, there's a mortgage product. It's called a HELOC. I won't get too detailed, but basically it's part mortgage, part line of credit that people have on a house. How does that differ from a reverse mortgage?
Great question. We get this often. So HELOCs are offered by the traditional banks typically, is where you find those products. And it's just home equity line of credit.
Yes.
The main differentiator between those two products is that at the bank, to get a HELOC, you need to go through some income qualifications, number one, which we don't need to do. So oftentimes, the seniors that we're working with won't qualify for a HELOC because of their age or lack of income, various factors, and the banks are very stringent on what they're looking for, so they might not qualify. Number two, if they do qualify, you are required to make the monthly only minimum interest payments. With our product, there are no payments required. So from a cash flow perspective, our product's very helpful for seniors that don't have the cash flow to make payments, and they don't have to qualify from the income standpoint that they would for a HELOC.
Okay. Now, that's great, especially because if they have to make payments, if they're coming to us to get a reverse mortgage to get out of debt, and then they have to start making payments again, that's just...
Well, it's troubling. And one other factor between those two products, between our reverse mortgage and the home equity line of credit, is that the HELOCs are callable, which means that at any point in time, the bank could call a client and say,
really?
we feel that we need to close down this facility, we need you to pay it back, and we're going to close it down. Now, you can imagine, if that was a $100,000 line of credit, most people would have to sell their home to pay that back. You're never going to have that fear with our product because our product is not callable. You'll never get that phone call that says you have to pay us back. So that's another big difference.
Wow, that's wonderful. Now, if someone's taking out a reverse mortgage, whether it's a lump sum or monthly payments, how's that going to affect their CPP or their income tax? I mean, I don't want to get us into this big quagmire of taxation stuff, but how's
it's a simple answer. It doesn't.
It doesn't?
It does not. It will not affect their pension income whatsoever. This is a client is simply accessing the equity from their principal residence. So there are no tax implications for one. It is tax-free dollars because the equity from your principal residence, and it will not affect in any way your pension income.
Really?
Correct.
That's ideal. Now, let's talk about the inevitable. What happens when someone passes away?
Correct. So I don't know the percentage, but in a large number of our clients,
Yes.
we get paid back when they pass away. You got to remember, Jeff, we're dealing with individuals that have said to us early in the process, we want a solution that lets us stay in our home.
Okay.
We're not dealing with individuals that want to sell their home. If they wanted to sell, they'd sell their home. So for very many emotional reasons, they want to stay in their home. They raise their kids there, their doctors around the corner, their friends, all that. They want to stay in their home. So they're going to likely age in place. They're going to stay in their home until they pass away.
Okay.
And so what happens is, if it is a couple, and let's just say the husband passes away first, the wife is going to stay in the home until she passes away. And at that point in time, their estate is going to take care of paying us back. So whatever our balance is at the time of both of their deaths, they're going to sell their home and they're going to pay us back, and whatever is remaining, they're going to pass on to their beneficiaries as they see fit in their will.
All right. So this is not, I'm bouncing around a little bit on you here, Sean, but if they have a reverse mortgage that pays them monthly, is that monthly forever?
It's monthly until what they qualify runs out. So for example, and that's a great question, if they qualified based on their loan to value of age, location of home, and type of home, let's just say they qualified for $100,000.
Okay.
They can use that income, whether it be monthly, quarterly, semi-annually. Let's just say it's $1,000 a month.
Right.
They can do the $1,000 a month until the $100,000 runs out.
Okay.
So they've qualified for $100. They're simply taking it in monthly $1,000 chunks.
I see. So just different way of cutting the
Just a
the
different
pie
way of taking the funds that they qualify for.
up. Okay. Now, next question is, what if they want to sell their house?
100% can be done at any point in time. So
Okay.
just like any traditional mortgage product,
Yeah.
we are simply a charge against title. So no different than any bank mortgage you would get.
Yeah.
We're a charge on title. It's the client's home. It always is their home. They can sell it at any point in time they want. All that we need them to do is pay us back whatever the balance is if they sell their home. There is one other stipulation.
All right.
So, like any other traditional mortgage product, if you pay back the funds early, there are penalties
Right.
when you sell your home and pay us back early. So I'll
Yes.
break them down for you.
Okay.
In year one, the first 12 months, it's a 5% penalty if you sell your home and pay us back.
All right.
In year two, it's 4%. In year three, it's 3%. Anytime after the third year, it's 3 months interest. So
Really?
it becomes very,
So-
it's not onerous at all after 3 years. So I always say to folks, if you're going to sell your home in the first couple of years, you might want to reconsider us as an option. But if you want to still consider us as an option, just know there are penalties involved.
Okay. All right. That's good to know. Now, you also mentioned during the break there was 2 stipulations.
Right. We have 2
Okay.
requirements of people working with us and taking out a reverse mortgage. Number one is that you maintain your property taxes current and up to date.
Okay.
And number 2 is you maintain your home insurance with fire insurance coverage up to date as well. So we have that right in our contract, and that's important for us because our only security, Jeff, is the home itself.
Sure.
And if property taxes aren't paid, the government could take the home. So we have to ensure that our loan on that property is up to date and current.
Okay. Well, that's actually that sounds like common sense. Now, the thing we did talk about before the break, we wanted to get back to is
Yes.
if the market turns and the house isn't worth as much as what the home equity or the reverse mortgage is, what happens?
This, I've got an answer for you, and I'm going to sort of set it up for you because
Okay.
it does come up often.
Yeah.
And we are the only provider of reverse mortgages in Canada.
Right.
However, there are many providers in the U.S.
Yes.
No affiliation to us whatsoever, but the product exists in different variations in the U.S. Now, if you remember back to 2007, leading up to 2008, we had some major housing corrections in the U.S. So let's
Yeah.
just say you had a reverse mortgage here and a house value here somewhere in the U.S.
Right.
Within 6 months, that house value came down like this. And so now the reverse mortgage was worth more than the home itself.
Yes.
In the U.S., some very negative things happen. They're calling those loans. They're foreclosing on people's homes. We don't do that in Canada. And in fact, we put it right into our final contract that goes to the independent legal advice
Yeah.
that if that event ever happened in Canada, which it hasn't, thankfully, and I hope it doesn't ever happen, but if it did in the
Yeah.
future happen, we would take and incur any losses on that. We would never ask for somebody for more money than what they owe us. So if their house went down like this, we'll take the loss on that.
Really? So they're not going to lose their house?
They're not going to
get
lose their
kicked
house.
out?
They're not going to be foreclosed on. They're not going to have anything happen. And if they passed away with their house being valued here and the reverse mortgage here, so the reverse mortgage is more than the value of the house, we would take the loss on that. Their estate does not owe us anything more than.
Really?
Yes, correct.
That's really, really comforting.
It is
to
comforting
hear
for our
that.
clients, yes.
Yeah, because that's a question I'm sure that comes up all the time.
I get it
so.
often. Yeah, I do get it often.
Yeah. Now, can someone use a reverse mortgage when they buy a house?
Yes, there are circumstances where we can, and I'll give you an example. I had, actually it was believe it or not, a couple in Orangeville that were looking to relocate from Orangeville to downtown Toronto because their kids and grandkids were living downtown Toronto. So they were looking to sell their Orangeville home, which was valued at about $500,000, and to purchase a condominium in downtown Toronto. Now you can probably guess that the condominium they wanted in downtown Toronto was worth more than their home in Orangeville. That's just the way the housing market is.
That's right, yes.
They still wanted to do that move. But what we did for them, we did a reverse mortgage on their new property, their new condo in Toronto. So we can indeed do what you just described, which we kind of consider a purchase, but it's a relocation to a new property.
Okay, so, I mean, that's good news for real estate agents because then they can use reverse mortgages to help
100%,
with a purchase.
Absolutely.
And for someone who's moving from a house of lesser value into a property of higher value, like you said,
which is happening often now, yes.
Then those people don't have to worry about a mortgage payment.
Well, that's just it. So they're thinking the stress of, oh my goodness, how are we going to afford this condo that's $150,000 more than our home in Orangeville?
Yeah.
The reverse mortgage can help with that.
That's amazing. I mean, most people don't think that they can move from Orangeville to Toronto. They always think people are moving from Toronto to Orangeville, which is, by the way, it's a good move. If you're anywhere in Dufferin County, Bolton, anywhere around here, I think you should probably move from Toronto and come down and visit us.
There you go.
So I'd like the way you put all this together for us. You've been able to simplify this topic.
Thank you.
You've made me feel a lot more comfortable about reverse mortgages. So basically, reverse mortgages, they're not going to lose their home. There's no payments they have to make. They get their money today. That's wonderful.
There's no tax implications. It's,
that's
equity in your
great.
principal residence. Yeah.
That's amazing. Sean, I want to thank you very much for coming on the show.
My pleasure.
And I want to thank everyone there for viewing and coming and participating with us. And Sean, I'm blown away. Thank you very much.
Thank you very much, Jeff. I appreciate it.
Okay.
Thank you so much.
Hello everyone, my name is Ben Lank and I'm the host of the show. This show is based on achievement. I'm going to be interviewing people who've had amazing results, whether it be huge weight loss, body transformation, or have become top in their sport. Now these are ordinary, everyday people. They all have jobs, families, and super busy lives, but have found the time to do something extraordinary. I'm going to be asking them all the questions we all want to know, which is how did you do it? I'll uncover their nutrition habits, exercise routine, and motivation. My hope is that by them sharing their amazing stories with you at home, it will help motivate you into action and will hopefully make this year your best year ever. I'm really excited about my interview today because it's not often I find someone who has done a complete 180 transformation with their entire life. Jess Rossiter not only transformed her body by losing 65 pounds, but also completely changed her life. As a youngster finding herself on the wrong side of the law and making one bad choice after another, it didn't take her long to realize the path of self-destruction she was on. She took her past experiences and used them as fuel to change her life. From being on the wrong side of the law, Jessica now represents the law as a lawyer. I'm super excited about the interview because this super busy mom of three is going to share with us her defining moments and how she's able to pull herself together, not only to change her body, but also talk to you about how she changed her life by going back to school and becoming a lawyer. When we come back from the break, Jessica will share her impressive transformation story. You don't want to miss it. What do you need help with in there? Okay. Hello everyone, my name is Ben Lanka and I'm the host of the show. This show is based on achievement. I'm going to be interviewing people who've had amazing results, whether it be huge weight loss, body transformation, or have become top in their sport. Now, these are everyday, ordinary people. They all have jobs, families, and super busy lives, but have found the time to do something extraordinary. I'm going to be asking them all the questions we all want to know, which is, how did you do it? I'll uncover their nutrition habits, exercise routine, and motivation. My hope is that by them sharing their amazing stories with you at home, it will help motivate you into action and will hopefully make this year your best year ever. I'm really excited about my interview today because it's not often I find someone who has done a complete 180 transformation with their entire life. Jess Rossiter not only transformed her body by losing 65 pounds, but also completely changed her life. As a youngster, finding herself on the wrong side of the law and making one bad choice after another, it didn't take her long to realize the path of self-destruction she was on. She took her past experiences and used them as fuel to change her life. I'm super excited about the interview because this super busy mom of 3 is going to share with us her defining moments and how she... I have to start over. I missed the line. Hello everyone, my name is Ben Lanka and I'm the host of the show. This show is based on achievement. I'm going to be interviewing people who've had amazing results, whether it be huge weight loss, body transformation, or have become top in their sport. Now these are everyday, ordinary people. They all have jobs, families, and super busy lives, but have found the time to do something extraordinary. I'm going to be asking them all the questions we all want to know, which is, how did you do it? I will uncover their nutrition habits, exercise routine, and motivation. My hope is that by them sharing their amazing stories with you at home, it will help motivate you into action and will hopefully make this year your best year ever. I'm really excited about my interview today because it's not often I find someone who has done a complete 180 transformation with their entire life. Jess Rossiter not only transformed her body by losing 65 pounds, but also completely changed her life. As a youngster, finding herself on the wrong side of the law and making one bad choice after another, it didn't take her long to realize the path of self-destruction she was on. She took her past experiences and used them as fuel to change her life. From being on the wrong side of the law, Jessica now represents the law as a lawyer. I'm super excited about the interview because this super busy mom of 3 is going to share with us her defining moments and how she was able to pull herself together and not only change her body, but also talk about how she changed her life by going back to school and becoming a lawyer. When we come back from the break, Jessica will share her impressive transformation story. You don't want to miss it. Welcome back. For those of you joining us, I am sitting here with Jessica Rossiter, who has made a huge transformation in both her body and herself professionally. Welcome to the show, Jessica.
Thank you for having me.
So I think it's a very, very impressive story that you have, and I just want you to share with us how it all began. So if you can go back and...
Okay. So I guess I started off as your average child in a family with a mom and a dad and a couple siblings. When I was about 9, things started to fall apart and we faced some family tragedy. My dad ended up leaving and I didn't speak with him for another 20 years or so. That is all what kind of started to spiral me into a downward spiral of starting with a bad attitude, and I started to turn to making friends with the wrong crowd of people, turned to drugs, eventually.
And this was even at the age of, how old were you at the time?
I was in grade 6 when I first started using drugs and smoking, drinking alcohol. Eventually, by the time of high school, I had dropped out of high school, was living on the streets, basically had disconnected with all of my family and just decided that I was going to party. Mm-hmm. And so that ran me into trouble with the law. I ended up in prison a couple of times.
And I guess with that party lifestyle also came, bad eating habits, the whole thing. So you're seeing yourself deteriorate physically, even at a young age too.
Absolutely. With drinking a lot, becomes a lot of weight gain, unhealthy choices, just eating out fast food, whatever you can get your hands on. And so I gained a significant amount of weight just by making bad choices food-wise and no exercise. Mm-hmm. Yeah.
So physically then, what did you get your weight up to, I guess?
I was close to 200 pounds at my heaviest point. Yeah.
Just from the party lifestyle.
Just from party.
Yeah. So how about emotionally then too? I mean, what was going through your...
During that phase in my life, I was a very angry person, depressed, even though I didn't know it at the time. Things just because of my attitude and my emotions, things just snowballed and continue to snowball into a worse scenario. And my mindset just kept getting deeper into the dark side, I guess you could say. Mm-hmm. Yeah.
So I know, one of the big questions I have on the show is, that with the defining moment. And I know what's really interesting with your stories, you actually have two. Yeah. You have kind of your physical defining moment, and then you also have a professional defining moment where you completely change. So I'd like you to share, both those.
Sure. I guess initially I got pregnant at a young age, and at the time I was living on the streets. I was kicked out of school. I didn't have a job. And when I found out I was pregnant, I decided that was the end of that lifestyle for me. I couldn't have a child and raise them and not be able to provide for them. So that's when I went back to high school and started to make some steps towards changing my life. And then I wasn't sure what I was going to do with my life. I didn't know what I wanted to be or whatever, so I just took one step at a time. I finished high school and then continued on to go to college and university.
So physically at that time, were you, I guess you're pregnant, so you weren't really like exercising, all that hadn't started.
No.
I know that you stopped drinking, stopped smoking, stopped doing drugs and all that. But what were you taking any steps then to change, or you just thought just to eliminate that was a good first step?
Yeah, my first steps were definitely just to cut the bad things out, to stop the drinking beer every night and to stop smoking and doing drugs. And just with that alone, there was a huge impact on my body. Weight just started to shred off of me. And once you start feeling better about yourself and losing some weight, you start to make some healthier choices. So I would eat healthier because I was pregnant and I was starting to feel better about myself. So that initially just started the change in my body for sure.
And how about your other defining moment? I find this one really interesting too.